Okay. This meeting is being recorded. Yes, both sides, I believe, Andy. So you're recording too. We got it. Technical difficulties dealt with. How you doing, boys?
Great to see you, Princey. I'm well. How are you?
We're good. We are very good, mate. Thank you very much. Lawrence here, obviously. Jesse, what's up with you?
How's it going, guys?
Well, Jesse's had a haircut, and Andy just keeps looking younger each time I see him.
I wish. You're very kind, Princey. You're very kind.
What
Kindest man I know.
what's
I
going
think
on at
I think Andy's
OnRamp?
been hanging out at Muscle Beach, I think.
Right. I was gonna say, do like employees of OnRamp? Do you get a free gym membership or something, and like free barber? What are the company perks? It's all about employee benefits these days, guys. So didn't you know? Were you not aware?
No perks that I'm aware of. They don't even hardly pay for editing for our podcasts that we do.
The main perk is you get to talk about Bitcoin.
Well, yeah, you get to hang with Jesse and talk about Bitcoin and discuss multi-sig and multi-institutional, multi-geographical Bitcoin custody. That's what Lauren's here for. Am I right?
Definitely not just to say hi since I have no questions, but
Well, I just said like three really weird things.
yeah,
Multi-sig. Did you hear that?
yeah.
What do you think that is?
Oh, that's for you as a unit too.
Yes, Lauren. After 500 shows, we're just about getting there as a partnership.
Uh,
Stronger than
what?
ever.
Yeah. What is a multi-sig?
Huh.
Sure. You want to take it, Jesse? You want me to?
Go for it, Andy.
Yeah. So, as you know, Lauren, to move funds and access your money on the Bitcoin network, you need a key, right? And multi-sig is it's a part of the Bitcoin protocol. It's native to the software that allows you to require more than one key to move funds, to move money. And so it makes it so that if you've got some arrangement where you don't want any single person to be able to move money, you can give multiple keys to multiple people and require them all to sign. Or if you don't want someone getting your keys, or you don't want to have personal access easily to your keys, and therefore you want to require yourself to have multiple keys to get the money, you can do that too. So it allows for a lot of interesting ways to improve security of holding Bitcoin funds. That's what I would say about it.
Yeah, agreed. Did that make sense at all, Lauren?
I'm gonna try and
So it's basically you keeping your keys to yourself or to other people kind of thing.
But this, Lauren, what if you had a box with 100,000 pounds in it, British pounds, and you had one key to the box, and you were worried that someone would find that one key? Maybe you'd want to hide, maybe you'd want to require two keys, two locks to open that box so nobody would steal your money. And that's one thing that multi-sig, multiple signatures can require.
Does that make more sense? That's the exact analogy I was going to go with. So let's pretend upstairs in your bedroom, you've got your piggy bank, right? Imagine that's a box, and on that box, there's three padlocks, and each padlock has a unique key. You would have one key, I would have one key, and maybe your best friend might have one key. So the only way you'd ever be able to get to that money is all three of us turned up and opened at the same time. Does that
Might
make
be
sense?
especially useful if a burglar came into your house and, God forbid, held a gun on you or something. Then you couldn't cough up the money. You'd say, I only got one key and more than one key is required.
Okay.
Yeah.
Yep.
So that's multi-sig explained to a 13-year-old. But we do that on the Bitcoin network using the Bitcoin software, the protocol, and it's a little bit
I
techy.
was gonna say, I think it might be a bit complicated, a bit more complicated than that.
Yeah, and that's what on-ramp Bitcoin are trying to solve for people. So they help their customers set up their multi-sig vaults.
Yeah. Yeah, Lauren, what we do, what Andy and I do with OnRamp is we help people have multi-sig wallets where they don't have to set up and manage and control their own keys. And instead they hire 3 separate institutions that do this for their business. So that they're hiring professional key holders to hold a key on their behalf in one of these 3 key setups. Yeah.
And we should state, actually, I don't know why we didn't start with this, but multi-sig is short for multiple signatures.
Oh,
Why didn't we think of that guy? All right.
Lesson learned. After years of explaining how things work on Bitcoin, we're still all terrible at it.
Yep.
Yes. You in the weeds.
Okay, so yeah, does that make it? When you use your Bitcoin hardware wallet, for example, that is also known, it's not a hardware wallet, it's a signing device. So that is making a signature for you that only you would be able to use because it's your device and you have the password and the passphrase to it. That device is signing that, yes, you own this Bitcoin, and yes, where it's sending to or being sent to is a valid Bitcoin address.
Yeah, I think that would have been a better start.
All right. Multiple signatures, guys. All right, let's get that on the website.
Yeah. Fair enough. Well played, Lauren.
Lauren, do you ever do Minecraft?
I used to, but I don't have it anymore.
She's moved on to better things, just like Satoshi.
Honestly, no, I would have had it if I could, but it was on a different device and that broke down like years ago. So.
But what were you? She's very knowledgeable of Minecraft. Were you going to?
I only asked because my 12-year-old's into it right now, and I thought I might be able to talk about something cool and internety that she might be into that's not Bitcoin.
Oh, right, okay.
Lauren, do you miss France, or are you happy to be in England?
I literally film nothing.
Yeah.
All right.
It's been a seamless transition, other than like the mess of everything and moving the things. It still feels as though we're on a home swap or something.
Yeah,
really.
it's like kind of on holiday, but with all of our stuff.
Yeah.
That makes sense.
It's been good. It's been a good one. It's been fun.
It probably doesn't hurt me as much because I know I'm gonna go back to France. If we lived in Asia and then moved to Europe, I know that's a harder place to go to.
In just 20 days, we're going back to France.
Yeah.
And when we go for a walk along the seafront here, on a clear day, you can see France. It's just right there, right across the water. So,
you're on the south, so you're near the channel.
Yep.
Good for you.
Oh yeah, beautiful murky waters, big stony beaches.
Freezing cold.
Yeah.
Big white cliffs.
That's right. They are very close. The White Cliffs of Dover.
Yeah.
You've been wanting to go swim in the sea.
I know. I just got to find the right time. I'm gonna go do a cold plunge in the channel there.
Swim the channel, aren't you, Princey?
No, I won't be doing that. Certainly not. I'll go for a dip, but no swimming. All right. Well, thanks for your questions.
Thank you for having me. All right, well, thank you. Bye-bye. See you soon.
Bye, Lauren.
See you, Lauren.
Bye.
Yeah, guys. So, we usually do the macro monthly that turned into the macro bi-monthly that turned into should we just do this every quarter because we can't organize ourselves? And so here we are back, October time, at time of recording. What has happened since we last chatted? And let's start with OnRamp, because that's what you're building. That's what you're both involved in. What has what strides forward have you taken? What's changed within the company over the last let's say 6 months?
Yeah, 6 months. The number one thing is momentum. I mean, there's been a lot of new client signups. The product keeps getting better. It's really cool now. I think the format, we've always known that we have a great format for to offer the market of here's a potential custody arrangement that, depending on your circumstances, could fit into what you're doing already, or could be right for someone who's just coming into the market and isn't tech savvy and doesn't feel like, they're up to the task for self-custody, but knows enough to know it's not wise to leave your funds on an exchange. Anyway, we've always known we had a good format, and the product has gone from a year ago, I'd say it was pretty clunky, to now it's like pretty slick. The user interface and all of the steps and processes and engineering behind the scenes is really quite cool. And I think people have heard about us a lot more now versus 6 months ago. And so we're getting a lot of signups. It's been pretty exciting to see. So that, yeah, I guess that's the big news on the on-ramp front is that people are really starting to take interest in adding this form of custody to their existing self-custody. I think that's kind of the most common scenario. Our most common client is someone who feels a little uncomfortable with all the responsibility of a multi-sig setup or even collaborative custody setup, where at the end of the day, you have the majority of the technical and security burden on you, and it leaves you worried at night a little bit, just in case you have some vulnerability you're unaware of, or if you screwed something up and you have all your eggs in one basket. So I'd say our most common client at this point is someone who's been in that circumstance and wants a little bit more peace of mind of having multiple baskets with different custody arrangements. So, keep your collaborative custody multi-sig self-custody setup, and then add a multi-institution custody vault. And then, based on however it feels comfortable, split your assets between those two forms of custody, and know that you've kind of distributed your risk between two custody formats. So I think that's kind of the most common pain point that we're helping to solve at this point in time. The other awesome thing about it, over the last 6 months in particular, is we've added an insurance solution. It's technically insurance-backed warranties that protect all Bitcoin balances that clients hold, which hasn't really been possible with any sort of custody solution before. So it's this SMA insurance on balances, specifically because the underwriters that we worked with through one of our key holding companies did their due diligence and determined that this is so low risk that this format of custody is so low risk that here's the pricing that we would be able to provide on underwriting, and that was low enough that we could just roll it into our product offering.
Right. So wait, that's huge.
Yep.
Am I hearing this correctly? If you park some Bitcoin into multi-sig with on-ramp Bitcoin, then insurance is just built in. That's part of the fees.
Yeah, and
so if for whatever reason, I mean, why would there ever be a payout? Like, what would have to happen for me as a customer to claim the insurance? Like what is the worst case scenario? Because it seems impossible. That's why
right. And I think that's why they were able to underwrite it and price it pretty cheaply. The list of things that are covered is quite a long list, and it's all these like extreme edge cases of like fat finger or man in the middle attack or something like that basically are not possible with this style of custody. But of course, you're going to wonder, is it possible, and am I protected? And now this provides that extra safety net of, actually there's insurance-backed warranties on all Bitcoin balances held in multi-institution custody. and you're covered.
100%.
Yeah, there are maximum balance allowances, but for 95% of people, you're never going to bump up against that. And, for that 5%, we can have multiple accounts.
So the only thing I could really think of that might be possibly viable, like as the company grows and you have more employees and there's more employees at each one of the key holders, and you just have those bad actors that calls up and say, hey, yeah, like, so Princey just called me and said he needs to sign a transaction for like all of his Bitcoin, like,
Right.
And perhaps we meet later down the pub and you guys just make that signing, and then so then if that were to happen, which again would be ridiculously low chances, I could say, yo, guys, my balance is showing 0. I didn't call anybody. What's going on? And then I've got a claim.
In that specific scenario, I'm pretty sure that would be covered by this specific language called spelled out in the insurance solution. Yeah, and that is probably the number one question we get of like, okay, so three separate institutions hold a key, but doesn't that mean that a person from 2 of the institutions, they could collaborate, collude, and you got one guy in one institution and one guy in the other institution, and they, sign a transaction to sweep out your account. But it doesn't work that way at an institution. It's not like BitGo has one guy with a hardware wallet in his desk drawer, and like that's how they're running their multi-billion-dollar business.
Mm-hmm.
There are institutional grade key arrangements, and then institutional grade processes, personnel access controls, and physical access controls that make it so you'd have to have a half dozen plus people in any institution on board, and then break all of the personnel and physical access control protocols in place that are designed by each institution in order to be impenetrable, because their entire business relies on them not screwing up something like that. And like in BitGo's case, BitGo's one of the key holders for us, and they're running the same processes with that particular key arrangement for an entire ETF. So they're protecting an entire ETF with 1/3 of the security that's involved in our custody arrangement, because that's one of the keys for us, and it's the entire ETF's protection for that ETF.
And I've got a question about that, because there's been a little bit of noise, and I'm not completely up to speed on it. But we'll park it for now, because I think the plebs listening are probably thinking right now, okay, so multi-sig and insurance all built into that. That is something that they probably might not have thought about, and inheritance. Because I was just playing around on the dashboard earlier, and it's been a while since I logged in, actually. And I do remember, actually, when we were going to and from, and I was testing it out, when you said, oh, it used to be quite clunky. It is way slicker now when I log on and take a look at it. And I remember, actually, when I was doing the practice deposit and withdraw, I had multiple phone calls, I think, from BitGo. Like, you had to go through at least 2 people, if I'm not mistaken. So, to your point, the chances of there being some kind of collusion between, like, bad actors at these different places is almost, you don't want to say never, but like,
right.
So,
and the last thing, if some bad actors at, let's say, BitGo wanted to collude to steal funds, they wouldn't do it in a multi-institution custody arrangement to sweep out one pleb's address. They would target the ETF that has, it's solely protected by that one key.
Much lower hanging fruit. Much more lucrative.
You also reminded me that the other big change over the last 6 months is we realized we can serve a larger portion of the market than because of our cost structure to serve an incremental client is there's a lot of fixed costs, and then variable costs are not so high. So we were able to extend our product offering to a bit further down market than we previously thought. So our pricing now starts at $150 a month, and so that's comes out to $1,800 a year, which is comparable or better than some of the other collaborative custody pricing structures out there. So, if people have heard of OnRamp before and thought, well, that's for for bigger balances, that's kind of how we started, and we have been able to expand our offering to folks who may only have 100,000 or 200,000 that and it starts to make sense to factor that in at that point. So
yeah, exactly. And of course that price point will put people off because they will think, well, I can just buy a hardware wallet for like $100.
Right.
So
yep. And if you're comfortable with that, one, it's because you're technical enough and you've gone down the learning curve to master what's needed there. And good for you. Like do that. Like, if you can handle self-custody and you can sleep well at night, great. Like that's an outstanding outcome. If your balance has grown a little too large for you to sleep comfortably at night, then maybe it's worth looking into. And also, like if you're trying to get your dad into Bitcoin, and you're trying to find the right place to get him to buy Bitcoin and have it be protected, we can do that. That he can set up with OnRamp, buy Bitcoin at institutional rates, so like very low trading fees, and then have it settle to multi-institution custody. So it's vastly better outcome than if he was to buy it on Coinbase or set up his own hardware wallet and screw it up and lose it.
And to him, like to carry on that thread with like onboarding your dad, for example, is log in. Here's a slick looking website. It's very professional looking. Here's a little dashboard. This is exactly what you're holding. This is where you can just hit the buy button, which I think is an upgrade since we last spoke. I can't remember. I think you were just rolling that out. So he can buy Bitcoin directly. He can deposit dollars into it. It's just like a Charles Schwab trading account. It's
that's what we're going for.
There's nothing too complicated there. It's not this weird, strange world of Bitcoin. It's like, oh, this just looks normal. So I deposit dollars, I buy Bitcoin, and that goes straight into Multi-Sig. You won't even know what those words mean, Multi-Sig. You won't need to, because to him, it would just be my online
vault. Yeah.
My online Bitcoin trading account. Like if that's, and the learning comes later. But yeah, to onboard more people, I think is critical and key, and this is what we're trying to do every single day as plebs on the street. So to have this offering, I think makes a hell of a lot of sense.
Yeah, thank you. Yeah, and it keeps getting better, which is it's been very exciting. So anyway, I mean, we can talk about other things, but if anybody's interested in learning more about the product, just go to onrampbitcoin.com and click schedule a consultation, and we'll tell you all about what it is, and ask about your circumstances and needs, and maybe it's for you, or maybe we'll point you towards what's right.
Yeah, exactly. And if they use that code BITTEN, they will save on the fees, $250. And last thing about the fees, people, again, all right, if you've been investing in a classic pension scheme or index fund or mutual fund or whatever, take a look at those fees. Like you're used to paying fees, believe me, and they're probably a lot higher. And the asymmetrical gain of what you're holding in a multi-sig vault compared to your fees is just going to go up. The value compared to the fee, the fees are just going to stay, right? They're not going to go. They might go up a little bit, but nothing near as much as what you're holding.
Yep.
All right, Andy, let's bring it in. What?
Yeah, let me tell you what I've been having fun with at OnRamp, which is our podcast. And we came out of the gate strong. We We first few episodes were Preston Pish and Jeff Booth and Lynn Alden, and we had Pierre and Morgan Richard and Breedlove and Mark Moss and Gladstein and Samson Mao, Dan Tapiero, VJ, Lavish, Natalie Brunel, and Sam Callahan, twofer. Then we had Scaramucci. Then we've been going through the BPI crew, the Bitcoin Policy Institute, Matt Pines and Troy Cross and David Zell, the founder, and Ovik Roy, who's an advisor. And then we
Those
just
guys
had
are all so smart, by the way. It's incredible.
Yeah.
so smart. I mean, but just in my opinion, well, they're my favorite Bitcoin organization, non-company organization. And then we had Tomer. Our episode with Tomer just came out, and we recorded with the great whale himself, Michael Saylor, and that'll be episode 21.
Oh, nice. Yes. Yeah, well done. I've got lots to catch up on. I've listened to a few, and I was listening to one earlier on, actually. So the world of podcasting. Welcome.
We learned from you, Princey. Just been watching you work your magic over the years here, and for some reason decided it would be a good idea to try it out and see what happens, and it's been great. It's been a lot of fun.
Princey, I have a question from our Saylor episode. A major topic in that I want to get your thoughts on was Bitcoin yield. And are there ways to do it in a way where it makes sense from a risk perspective or not? What do you think?
I always default to Alan Farrington. Where does the yield come from? And the yield are the friends you make along the way when it comes to this particular. How can you set it up? I've yet to see a way to do it.
Saylor's argument, which I find very compelling, is that I think there's an unstated assumption in here of for the short to medium term, a decade or so, this is probably viable. If you can borrow from JP Morgan, is it borrow or lend to, I guess, Andy?
I don't know. You're the one explaining this.
Well, so you're already in a mess. Yeah, so have you got to give over your Bitcoin to JP Morgan? Is that what you have to do first? Because I'm out straight away.
Yeah. But I guess the idea is that JP Morgan is as good as the U.S. government. They're connected, and so if your yield is coming from JP Morgan,
they control the U.S. government, I think is what you're trying to say.
Yes, controlled and backstopped by the U.S. government. So if they're saying, we'll give you a 5% yield, we let us borrow your money and we will give you a 5% yield on it, then that's bankable, or at least that's low enough risk that it actually makes sense to do. That's, I guess, his argument.
So which is of course problematic, potentially problematic in that they can't print more Bitcoin. So, if you had some event where Bitcoin just went bananas to the moon and your assets, their liability denominated to you is denominated in Bitcoin, they owe you your coins back.
Plus 5%. Yeah.
Plus exactly. Plus the yield. Although I guess they can print that part maybe.
Right.
But they can't.
And I think that's Saylor's argument is if they're good for the Bitcoin, they're definitely good for the yield. And there is that assumption that they're good for the Bitcoin and they won't fuck it up. But yeah.
So did you see my talk about usury that I went around?
No.
I think Daniel's setting up his views here.
Yeah. So where does that let's walk through it. Well, it's like with any loan. You go, any fiat loan, you want a mortgage, you want a car, you want a holiday, you want a couch, need a washing machine, whatever it is. And you go in to the showroom and you speak to the salesman, it's like, oh, well, can't find you. Oh, it doesn't matter. It's 0% finance, and you're good to go. Because they've got the financial arm of whatever bank backing them, underwriting the salesperson, the showroom. So where does that come from? Well, that's just like credit is an expansion of credit. It's not like they're not literally at that point printing money into the system, but they are expanding the credit in the system. So we've got the monetary base. That just gets wider, right? So that means at one point, the monetary base is going to have to come up to try and meet the credit at one stage. And this is what Parker talks about in his chapter, Bitcoin's not backed by anything. I think we went through it. So the expansion of credit therefore leads to quantitative easing, let's call it that, printing a shit ton of money to try and bring that, and we'll never get it into balance, right? There's never $1 out there for one credit. It's like 10 to 1 or whatever the numbers are at the moment. Now that money that gets printed, or this credit that just gets like, so a mortgage is a perfect example. You want the $500,000 house. You have $100,000 to deposit. That $100,000 that you've accrued over the last 10 years of very hard work, using your skills and your time and your energy to get the job in the first place and work your way up the corporate ladder, that $100,000 represents everything that you've worked for until that point. Now, the bank will take that $100,000. Thank you very much. That's just a deposit, and will give you the other $400,000 in form of a loan. That loan, that's not printed at that point, but that is credit that's created. And then we're going to charge you interest on that. Now, the definition of usury is an exorbitant charge of interest on lent money. Now, if that money is counterfeit, it doesn't matter if it's 0.025% or 15% that you're being charged on it. It's usury because it was non-existent in the first place. So that my argument with the whole yield thing with Bitcoin is that if I place, first of all, I'm not comfortable sending Bitcoin to JP Morgan, and I don't think there's any amount of small print there that you could wade through to be completely 100% certain that they're going to be good actors in 3 or 4 years' time, however long the term is for, and they will return the Bitcoin. Goodness knows what kind of financial wizardry they're going to get up with it whilst they're holding it in that time. But they can return you to fiat. Of course they can, because they just extend the credit. Mm-hmm. And so what does that do? Well, that instead of, so I know I've heard Saylor talk about dying with your Bitcoin to leave a legacy because you increase the purchasing power of everybody else around you after you've gone. Whereas what's going on right now, the hundreds of millions that are being borrowed and just like printed, is devaluing the purchasing power of everybody's dollars whilst we're alive. So there's two sides to every story, and the whole yield on Bitcoin thing, I don't know. A friend of mine is in Australia. He's trying to think of a way to do this, where you would have fixed term, a 4-year fixed term, and you would draw monthly. You would be paid out monthly in fiat, but it wouldn't be with banks. It would be with private investment groups, like multiple institutions that come in to provide the fiat. But then where are they getting it from? So, it's a difficult one.
One thing that's happening, talking about this with Lavera, is
Andy, I think
we lost your mic, Andy. We lost your mic. We've gone back to amateur hour here.
Hour mic. Bummer. Hold on.
Yeah. So Princey, I agree with your summary. I think where I come out is that if I was in Michael Saylor's shoes and JP Morgan is, it's possible to have JP Morgan as the counterparty. And, I'm trying to assess the risk of default, right? Of non-repayment. I think I'm assessing that risk at 1% or less. And I'm happy to take a 5% yield for the right position size, right? Like whatever that means to you. Like I would love to be able to lend 10% of my meager stack to JP Morgan and get those terms and get a little like a 5% yield, knowing that I'm risking only 10% in that 1% scenario of default. I feel like so I see that argument from Saylor, and I feel like I guess I'm sort of on his page in terms of like, well, JP Morgan's taking the risk, and at the end of the day, like they're going to be backstopped by the US government, and I'm going to be made whole most likely. But there's a 1% risk maybe that I'm not. Yeah.
My mind goes to 6102, right? I mean, the actual 6102 attack that occurred in 1933, they had to print in the newspapers, hey, you guys, get to your nearest Federal Reserve Bank, representative bank, and turn in your gold now because we're taking that off you. You're not allowed to hold gold. Now, if the same thing was to happen to Bitcoin, and it's already in the banks because you placed it there to try and score a little bit of yield off it. And let's not forget, like, who are the biggest thieves on the street? If we're all worried about a $5 wrench attack, I mean, that can happen. Someone can steal your wallet and steal the $20 out of your wallet anytime. But like,
so you're saying is don't trust that small print, really?
No, because that small print can be usurped and overwritten.
Yeah, that small print is a wrench, a giant wrench.
Yeah, and we know. Well, we all know how the Federal Reserve Bank, if not, then go and read The Secrets of the Federal Reserve and look at JP Morgan's involvement in that setup and who actually owns the stake in the Federal Reserve. And they are, they're ultimately calling the shots, as we know. And if they put pressure because they want to roll their CBDC out, hypothetically, they want to roll out FedCoin, whatever, the first thing they've got to do is cripple Bitcoin. And if there's a bunch of Bitcoiners with their Bitcoin sitting in JP Morgan's coffers, one of the closest, most exposed stakeholders to the Federal Reserve, well, what are they going to do? They're just going to rug you, and they'll probably pay you out. And it's okay, but we'll give you the FedCoin equivalent and the kicker on top. So yeah, I mean, I've not spoken personally to Saylor about it, but I saw the conversation with Safe. I look forward to listening to your pod about it too. But for the plebs, just stack.
Right.
Yeah. Keep it simple.
None of us have access to the potential like negotiations that that MicroStrategy could have with somebody like JP Morgan to say like, all right, here are our terms. Do you accept? You're going to be paying us 5% yield under our terms. No pleb has access to that, so you would just get rugged by tiptoeing into JP Morgan's world.
Can you guys hear me again, or is it still busted?
Yeah, come on, Andy. Come on. I've been dying to get your take on this. You might.
All right. So a couple things. I was talking about this on Livera last week, which is other than Bitcoin, what's the fastest growing asset class? Sort of new asset class in the world. Anyone? It's this thing called private credit. And what it is it's junk credit, okay? It's low quality or highly levered companies that have a lot of debt. This is the market that first sprang out of Michael Milken's head.
In the 80s, right? Yep.
Back in the 80s. Okay, Drexel made a killing on this. Milken went to prison. There's a great story there. People should definitely read it.
Yep.
Also, he's reinvented himself as a philanthropist. He runs one of the most exclusive and successful conferences globally. It happens every year here in LA, in Los Angeles. Anyway, that's a whole other can of worms. So the junk bond market grew rapidly in the the late 80s and then into the 90s. Then there was a second low quality debt market that sprang out, which is called the leverage loan market. And that was actually ongoing on the time, when I was on Wall Street, maybe even when you were Princey, although it might have been a little bit after your time. And it's basically a similar product. You're lending to highly indebted companies, lower quality credits. There's a high risk of default, basically. Okay, and what's happened though in the last decade or so is in a world after the financial crisis, the banks have actually been pulling back, reducing their lending to low quality or highly indebted companies. And who's stepped into the void, into the breach? It's the big private equity firms primarily. And they have launched these funds, which I think are a little bit similar to what you were describing, which is, there's a bunch of investors. They have lockups on the funds. They raise funds for multiple years, and then they go out and they underwrite loans to highly indebted companies. Some of them are just too small, frankly, to issue bonds in the public markets. And so this is now more than $1 trillion asset class. It's as big as the leveraged loan market. It's as big as the high yield bond market, but it is one step away from huge leverage embedded in the lender itself, like a bank, and moving more toward a fund where you've got matched maturities, right? The capital is committed. You underwrite loans, but the capital cannot be rugged or yanked. It's not like a bank where people can pull their deposits. You can't have a situation like you had in the banking crisis 18 months ago. And so, yeah, frankly, it results in less leverage in the lending system. And that, I think, is something more like what we'll see in the future with a Bitcoin-based system, is just overall less leverage in the system. But then, the logical extreme, one of my favorite things about Bitcoiners is they go to logical extremes, and it's not hard to argue that, oh, maybe it won't be 100% this way, but maybe it'll just be 95% this way. And so my sense is that, yeah, there'll be much less debt in the system, much less credit in the system. But will some enterprising entrepreneur figure out some whizzy new way to make it safe enough that some percentage of hodlers are willing to part with some portion of their stack, to get a little bit of yield? Yeah, I think that'll likely happen. It also could be much later. I mean, it could be in a period when the annual price appreciation of Bitcoin and the annual volatility is much lower, and the annualized volatility in terms of purchasing power is much lower. And that kind of a system fundamentally is less likely to go belly up and may be able to support some amount of credit on top of Bitcoin. But that could be far away. I mean, that could be, who knows? That could be a decade or two away.
It could be 30 years. Yeah. I feel like the end state is there's some sort of Bitcoiners are able to achieve, like, to lend out their Bitcoin in a future state where the price of Bitcoin doesn't rise a ton, and you can lend out your Bitcoin and receive with under contract of like a 1% yield in Bitcoin terms, and like that's about as extreme as you could ever hope for. Realistically, and how many people how much capital will be interested in that? A lot less than in the fiat system, where it makes a ton of sense to run it up, in terms of how much leverage you take on, because it's always easy to repay.
And Lotnick announced this, right, from the Nashville conference, that BGC, Cantor Fitzgerald, we're going to start a Bitcoin, a $2 billion financing Bitcoin product. I don't know it. I don't know the insides and outs of that. Did you guys dig into what they're?
Don't you love announcements? Don't you love announcements, Princey?
Yeah.
Announcements with no details.
Yeah.
How many announcements of new products, new features with no details have we seen over the years in Bitcoin?
It says here, and I quote, "We are excited to help unlock Bitcoin's full potential and continue bridging the gap between traditional finance and digital assets. Bitcoin investors, we will now build an incredible platform to support Bitcoin investors' financing needs."
Did you say incredible? Did he actually use the word? I would say it is incredible, as in not credible, because there's no detail, like bridging, fantastic. I mean, what are we talking about?
I don't know.
Like, we're talking about unlocking Bitcoin's full potential, which is the other phrase in there that is similarly nothingness.
Yeah.
Love it.
But what is
Sounds
that
hand
business?
wavy.
Are they going to do something like you just described? Like I send them Bitcoin and they send me cash at the end of the term or on a monthly basis? And am I paying them interest or are they paying me interest?
You know what it makes me think of? It just makes me think of Tether. It makes me think of this, giant, whatever, $150 billion or something pile of assets. And we know that one of the things in that pile of assets is Bitcoin because they like to buy some Bitcoin and hold it as part of the portfolio. And obviously, I think we know that Cantor, manages the treasury with respect to treasuries, as in U.S. T-bills that are part of the portfolio, the large part of the portfolio of Tether. So, by some magic, could there be something going on there? Could investors come partly finance Tether's balance sheet? Could you add some leverage on there, backed by some claim against the treasury? I don't know, who knows? I mean, there's a million things you could financially engineer, but until we'll just have to wait and see.
Yeah. I mean, in theory, couldn't you hedge your position and then take the dollars and put that into T-bills and just get that, that nominal yield while you're Bitcoin neutral because you've hedged at the outset? And you guys know more about this stuff than I do, so.
It's getting too complicated though, right? Just stay humble, stack sats. Like that's
that's true.
If you want, like, and this is the thing, right? People are, how do I get more Bitcoin? Well, you provide more value in the marketplace. So if that means working overtime, getting a second job, getting a side hustle, do that. If that means starting a podcast, writing a book for Bitcoiners, a product, do that. That's the way. Like that's the traditional way of being able to afford more things is by providing value, not like, okay, how do I financially engineer some yield wizard technique? Yeah, I don't like that. That's my kind of PSA, pleb service announcement. Like, just keep it simple. Follow Matt Odell and stay humble. Stack the sats. Don't chase the yield because it might just turn around and bite you in the ass.
Yeah. Any of this stuff is really
excellent advice.
It's only applicable to a company with $1 billion plus of Bitcoin. Like outside of that, you've got no business wading into this world.
Exactly. So staying with institutions and ETFs and Coinbase, did you guys see, was this on your radar? Like, has something happened with the ETFs now insisting that Coinbase have full proof of reserves of the coins that they are supposedly buying on behalf of their God knows how many customers? The inflows into these ETFs are huge, and they have been since January, and that they've shown no sign of slowing down. What's going on? Like, what's on your radars?
And it's amazing that the Ethereum ETFs have had a net outflow during their entire lifespan of a few months now. Net outflows from the Ethereum ETF. They're using that as exit liquidity. Large Ethereum holders are using the ETF to get out, which is hilarious.
So they're placing the ETF and then just taking the haircut. They're sending Bitcoin to the ETF. What are they doing? How are they working this out?
For the Ethereum side? Yeah, I mean, I guess the mechanics would be that that they are Ethereum holders are probably subscribing in kind to the ETF and then selling to get to, like, as a net outflow from the product, rather than more dollars coming in than Ethereum coming in to be sold, if that makes sense.
Don't do ETH, kids. That's the underlying message here.
but on the Bitcoin ETF side and like the Coinbase the tightening up of how Coinbase has to settle the ETF activity. I think Annie, I'm sure will have a more detailed and informed view of this, but I think it's a great sign that the ETFs are, I think, probably honest actors, at least in this regard. And so they've got nothing to hide. They've got nothing that they're like been trying to do at the margins to like squeeze some yield out of nothingness. And so this bad press sort of starts this circle of like, oh, you guys are allowing for like slightly opaque settlement. And they were like, oh, well, actually, let's just make it clearer then. And we'll tighten that up because we're not doing anything there anyway. So I guess it's a good sign ultimately.
Yeah, I think it's fair to say that every bridge, quote unquote, speaking of building bridges, between the TradFi system, legacy finance, and Bitcoin, there's always a little slippage or a little friction or ways things can go wrong. And if you're talking about, creation and destruction of ETF shares, I mean, this is not my area of expertise. Should call Balkunas or Seyfert or the ETF experts. But at any rate, if there's any slippage and if there's any errors and if there's any differences between the accounting of someone who owns an ETF share or some custodian who aggregates a bunch of ETF shares in street name, and what they think their clients own in terms of actual coins, like actual unspent transaction outputs, there can be problems if price moves dramatically and there's errors in execution on the dollar to BTC or BTC to dollar flow. And so the tighter, the less lag you have there, both with respect to execution of the trades and also with respect to public reporting of who owns what, including which UTXOs are controlled by Coinbase, which is the custodian of the assets. The tighter you make that stuff, probably the better, and probably the less likely that there's differences between the accounting differences between the books on the fiat side versus on the Bitcoin side.
And now we have this extra layer, options being approved.
Yeah, this has generated some controversy. I mean, there's one guy, I think out of Bitwise, can't remember his name, who suggested that this could increase the volatility of Bitcoin, the dollar price volatility.
Mm-hmm.
And then there are others who think it won't. I don't have an opinion. I think it matters a lot how big these markets get. It's definitely it's always been one of my concerns. Everybody's concerned, right? You've spoken about it before, Princey, about the gold market and manipulation and the multiples of paper claims that sit pyramided on top of the actual underlying. And of course, that was one of the issues with FTX was, a bunch of people, quote unquote, bought Bitcoin on FTX, but either they didn't actually buy the Bitcoin or they sold the Bitcoin later and people had claims, but actually the Bitcoin weren't there. And that does affect price. If you put in a buy order on whatever exchange and you think you got Bitcoin, but they don't actually buy the Bitcoin, then, price is effectively suppressed. So I watched the futures markets on Bitcoin. I'm kind of worried about, if those get really big, especially compared to the size of the underlying market, could that be a price suppression tool? I suppose you could say the same of options. And then the flip side of it is, well, this is just normal with the normalization of an asset class. Like, you got $1 trillion asset, you better believe there's going to be an options market on it. You better believe there's going to be a futures market. You better believe that all the tried and true ways of pyramiding and creating derivatives on top of some underlying asset of any size, which is what Wall Street's actually, I guess, actually good at.
Yeah.
It's gonna happen. So it's it's adoption, it's normalization. Yeah, it's nothing new under the sun. And so we just have to keep an eye on it. I don't know what the outcome will be other than this is just more normalization and integration of Bitcoin into the financial system.
Yeah, the financialization side of Bitcoin, which we've talked about before, and we always knew it was going to happen. We knew these markets would spring up out of nowhere because they already exist across the board on everything else, and it is a rent seeker's paradise. So they've got it. They've got what they wanted, and Wall Street now are fully, firmly, both feet planted in the Bitcoin world. And what worries me, to echo the point of whoever it said, well, it's going to bring more volatility. I think it does too. And I think it brings a whole new tool and mechanism for price manipulation. Because if you think about, let's say you've got proprietary trading funds out there, hedge funds, whatever, taking a punt on specific Bitcoin strike prices and dates, like, February 100s, like 100,000 strike price, and you're getting towards that expiry date and it's not going your way. Well, what can you do? You can just dip straight into the spot market and start manipulating the price for spot where you need it to go, up or down, depending on what side of that trade you are. And I think it's going to create a lot of mess. And I think again, Pleb Service Announcement, sit back and just watch people get burnt, because Bitcoin humbles everybody, and Wall Street is there's going to be such a huge humbling to somebody.
Let me put forth a scenario, because I'm just thinking about it real time.
Yeah.
And it does worry me too. So every option, let's just take a call option contract, right?
Yep.
You've got the buyer and the seller.
Mm-hmm.
And so the buyer has unlimited upside on the price of Bitcoin, right? If Bitcoin goes up, the call option owner makes money. And by the way, they make more money, at least in dollar terms, well, also in Bitcoin terms, than they would have if they just bought spot Bitcoin.
Well, they have to pay the premium to the options writer, okay? And then if they buy that call option and it goes up through that strike price, come the point of maturity, they have the right to buy Bitcoin. Let's say it's 100,000 strike price. The price of Bitcoin is now 120,000. They have the right to buy Bitcoin at 100,000 from that person that wrote, right? So this is just to get people up to speed. So yeah, carry on.
Yeah. And so why is that useful, let's say, for a hedge fund? Well, a hedge fund has only so much capital, and they can effectively, this creates leverage in terms of rate of return for them. Right, buying a call. This is the whole reason that you had Wall Street Bets and all these retail guys buying short-dated call options, these lottery tickets, is because if they hit, they make tons of money. Okay, so that's appealing for a hedge fund. Well, where does that call option arise? It has to be created, so somebody has to be on the other side of that trade, which means they are going to have potentially unlimited downside if Bitcoin price goes to the moon, right? The seller of that call loses their ass, essentially, if it's exercised. So how do they protect themselves from that? Well, they have to probably collateralize it with Bitcoin, because the seller can protect themselves from the asset getting called away from them by having the asset, right, parked there. Well, but that means one more Bitcoin in the financial system, right? Because it's going to have to be literally, custodied in the same system, the same account, effectively, as the call option, so that settlement can happen seamlessly. So it looks like on net, that could just suck more coins right into the custodied system and out of, let's call it, self-custody.
So don't feed the beast. Keep your coins to yourself. And in Multi-Sig, so Andy, do you think that's one? What are they settling in? Are they settling just in dollars? So this is just, do they even, or are they settling in Bitcoin? I've not read the terms. I'm guessing they're settling in dollars.
I actually don't know.
So if they're just settling in dollars, then they're just going to get bailed out like they always do. And yeah.
Yeah,
That's why I think the volatility I think is going to spike in the near term as these financial derivative products hit the market. And at the same time that we all know X amount of months after the halving and we draw in closer every single day, the bulls are going to start running. And there's no following rhyme or reason where that is going to go. And there's no amount of price manipulation techniques or suppression techniques that Wall Street are going to be able to do without getting humbled.
Bring it back to Saylor too, right? What happens if you're right, Princey, and the price volatility goes up? That feeds the MicroStrategy beast, because the higher the volatility, the cheaper he can raise capital, because basically the cheaper he can underwrite new capital and go buy more Bitcoin.
Mm-hmm.
The value of the embedded option in his convertible debt that he issues goes up, and maybe that'll be a feedback loop. I guess we'll find out.
I think that's his thesis, and I have so much FOMO about that one. It's the one, I don't have any Bitcoin in a tax advantaged account, so if I was to sell any Bitcoin, it would be a taxable event. And so if I wanted to get in on MicroStrategy, I would have a tax event up front, just trying to partake. And that has prevented me so far, and still does prevent me from partaking in that. But he's managed to deliver a 17% Bitcoin yield, quote unquote, by doing this, per share. The amount of Bitcoin that each share represents has gone up 17% this year. That's awesome. I wish I could, be a part of, be on that train, but unfortunately.
And when does this new accounting protocol it's first quarter of next year? Is that right?
It goes into, I think it's January 1, 2025. The option has been in place since January 1, 2024. To electively switch to that form of accounting, and then it becomes mandatory. It's either Q1 or I think it's just January 1, 2025. And so MicroStrategy has not yet elected to do that. Of course, Wall Street is valuing their holdings accurately, but from a FASB GAAP perspective, their quarterly reports continue to suck because they have to recognize any intra-period decline in the value of their Bitcoin as a realized loss, and they're not allowed to record a realized gain from any, or an unrealized gain from any appreciation in the value of their holdings intra-quarter. So anyway, that'll start happening Q1 2025 when they have to switch to that. I don't know if there are any stipulations. They might be able to stage out how they transition to that, rather than switching 100% Q1 and having like a massive one-time quarterly gain from the unrealized
quarter. It'd be a big quarter at MicroStrategy.
I know. I was thinking
like a $10 billion quarter.
See you guys on the earnings call. That would be. I wonder how he's thinking about managing that and the team over there. But also think about, like, where's the price of Bitcoin going to be? Like, on that first earnings call.
Right. Maybe it's 80, maybe it's 100 by then, maybe it's 60. We'll see. I think the really cool thing about what that'll start doing is MicroStrategy.
We all agree like $100,000 is this key
psychological
mental psychological barrier, and as soon as it goes to 100,000 and change, we're in a whole new era.
I agree. You got no reason to sell at 130 if if you're going to sell, you're going to sell 90 to 110 something. That's probably what you've got circled on the chart. But anyway, so I think sell pressure probably lightens up quite a bit once you get in 130, and then you could gap up to 200 pretty quick. Well, we'll see. But
I've heard that if you sell any coins below 100K, you're not invited to the 100K party.
It's funny because I told
That's
you
how it
guys.
works.
I told you guys I caught up with Valis last night. Shout out JV. We all miss your voice. Come back to us. He sneakily just removed himself from the podcast scene. He didn't give any big farewells. Like, it's John, come back to us, brother. But I said to him, well, you might be getting that call in about a few months' time to start sending out the invites. So what are you going to do? Just hide in Thailand? And are you like wherever the hell you are? Or are you going to come and join us? Like, what's going on? You're supposed to be organizing this thing. And he's like, do you think, like, wasn't that just a meme? I'm like, yeah, but one of the most important. And there are a lot of people that remember it. So
yeah, that's definitely real. He can't bow out of that.
Well, it's up to Saylor now.
Valis, you got to come back.
Well, Valis was only ever going to be like the deal was made that if it hits 100K, Saylor throws the party, but John handles the invite. Up to like 2,000 people. Yeah, I don't envy that job. But yeah, well, one, we got to get there, and two, Mike's got to actually have the gas to host a party for a bunch of plebs. There's a lot of variables.
That's it. Oh, I'm sure both those guys will honor their commitments.
True Bitcoiners.
That's right. We're gonna hold them. We're gonna hold them to it.
So whilst we're on this chat of price, which we tend to steer clear of on the Once Bitten pod generally, but when you guys are on, it's always fun to go down these thought processes. Your slideshow, Jesse, has been doing the rounds of conferences. Thanks again to Michael, who's been using some of the slides from there to show accurately what's been going on and where this could go. So do you want to lay out your theses a little bit for those people that haven't heard where this might be going in 10 years and Saylor's thoughts after using your article in your slideshow?
Yeah. Yeah. So I wrote Bitcoin's Full Potential Valuation a year and a half ago, and Saylor read it at the time and liked it and retweeted it and sent me a nice note. And then shortly after that, he started using the kind of framing slide that I used to tee up the whole article in his presentations. And that slide is just, what is the global asset landscape? It's an attempt to show all of the major buckets of value in the world and total them all up. What are the subtotals and what does it all amount to? And it's $900 trillion was my research into triangulating the right size of these buckets. And those buckets are like debt and real estate and global equities and gold and money itself and Bitcoin. And Bitcoin obviously is $1 trillion asset in this $900 trillion sea. So that's 0.1%.
Isn't it? Just stop there. Just hit
1/1000th
right
of the, yep.
1 trillion in a 900 trillion marketplace.
Yep. Oh. That's right. And I think that's why it's why I wanted to get to that slide. And it's why he started using that slide. Because it does a good job of like laying out how objectively early it is for Bitcoin. 1/1000th of the world's assets. So the argument in that article goes that, and I later found out that Andy had written something similar in his book. Similar kind of analysis of okay, so you have all these buckets, and if we're saying that Bitcoin is objectively a better store of value asset, has more attractive properties as a store of value asset than any of these other buckets, and in my opinion, that's because of increasing scarcity of supply issuance and the fact that there will only ever be 21 million of Bitcoin. That's not true of any other asset class, even real estate. They're always making more land or building skyscrapers. So there's always supply inflation growth with any other store of value asset. Anyway, Bitcoin's a better store of value asset. How much of the world's value might be interested in flowing from the buckets that they're sitting in into this new bucket that's tiny now, but is a better store of value asset, has better prospects of growing than anything else out there. And you can stop at that point and say, well, obviously a lot. There's some amount, a lot, or you can try to triangulate a reasonable estimate and say, well, it seems like maybe you could get this amount from bonds, this amount from real estate, yada, yada. So I did that exercise and I came up with, well, I think the full potential valuation for Bitcoin in today's dollars is 200 trillion out of the 900 trillion. So, 20% of the world's assets could be Bitcoin eventually, which would mean $10 million per Bitcoin in today's dollars. And that was my analysis. And Michael Saylor has started using those slides and then ended up building his own model of taking the same approach, the same methodology from that article and entering his assumptions, which is what I encouraged in the article, is everybody should do this for themselves. What do you think? And so he did it, and he built his model with his team, and they just open sourced it, so it's available on GitHub for you to download as an Excel model, and it's a very well made model, and you can tinker with the inputs, the assumptions of what happens. His version of it differs a little bit from mine, namely in that I kept all of my numbers in today's dollars because I feel like it's hard to make sense. As soon as you're factoring in potential inflation, everything gets confusing. So I kept the future state in today's dollars, but he included a 7% annualized inflation projection for the next 21 years. And that basically 4X is all assets, the global asset landscape, which really means that the dollar becomes 1/4 as valuable. And so the existing assets are nominally 4X more in dollar terms. But and from there, he came up with his bear case, base case, and bull case. His bull case kind of lines up with my full potential valuation of $49 million per Bitcoin divided by 4 to get 12, which is pretty close to my 10 million per Bitcoin number. His base case was 13 million per Bitcoin, and again, you got to divide by 4 to get what that would mean in today's dollars. So that's $3 million per Bitcoin in today's dollars, and his bear case was lower than that. But yeah, that's the full summary of what I put that article out there. Saylor's been using that graphic and then ended up running with that framework and putting out his own model, which has been really, really cool to see. I told him on our podcast, it's definitely the biggest honor I've had in my Bitcoin career. So I'm thrilled that it happened.
And that was projected out over how long? Like 10 years or something?
So I said decades, and I didn't put a number to it. He said 21 years.
Okay.
So he sort of set the 2045 and obviously using the 21 number as a meme. But yeah, full potential, I think, probably takes longer than 2 decades, but I think that's part of why his base case is lower than full potential.
Love it. So I love my turn now.
Yeah.
I love the full potential framework. I just celebrated 5 years anniversary of Why Buy Bitcoin, and Why Buy Bitcoin includes evaluation.
What chapter is it in there?
Since you asked, Jesse, it's page 126. Are you sitting
comfortably, boys and girls?
No, it's chapter 9 is the investment case for Bitcoin.
Mm-hmm.
And so the categories, for me at the time were, it's going to take market share from gold, It's going to take market share from fiat, from offshore assets, and other stores of value, including real estate, stocks, etc. Okay. And then what I did is I took a 10-year view. I guess I was too short term greedy here, people, right? Too high time preference. But the number I came out with for the 10-year view, and remember this was 5 years ago, so we're halfway there, was $400,000 per Bitcoin. And at the time of publication, the price of Bitcoin was like between 8 and 9K. Okay. Let's call it 9K. So you're talking about a 10-year time frame where you go from, or let's call it 8. If you go from 8K to 400K, that's what multiple? 50x. Okay. So, and if you assume it's somewhat exponential, you say, okay, what's the square root of 50? Roughly, that's the square root of 49. So you figure out maybe you get 7x and then you get another 7x. Well, we're halfway there time-wise. It's 5 years out of 10. And 7x on 8K or 9K is about 60K. So we're kind of, probably by blind luck, right on schedule or right on target as far as my 10-year projection. But that's just a 10-year view. There's no guarantees.
And
that's certainly a much...
That 10 years is up in what, like 2029?
Yeah, 5 years from now.
5 years from now, 400. Okay.
Which seems kind of reasonable, right? I mean, order of magnitude, you're talking, you still get one more. That's yet another cycle away. It might even be 5 years might be in the teeth of, the final bull move on. If we get a bull move in 2025, then 4 years later, you're talking 2029. Look, it could be an undershot. I don't know. Time will tell, but that's kind of where I came out. That is not my view of potential full valuation. I like Jesse's framework because that's the apotheosis. That's the ultimate outcome for this thing if it reaches its potential. But that's my 10-year view, and we're kind of halfway there.
Yeah, you're exactly on track. That's going to be a hell of a victory lap in 5 years if it's spot on, Andy.
Fingers crossed, boys. Well, although it won't be as fun. It won't be as fun as Grandpa Jesse, telling his kids and or grandkids about Bitcoin reached its full potential that Grandpa wrote about or Dad wrote about 30 years prior, 20 years prior, whatever it is.
He'll have his grandkids on his knee reading them Bitcoin and the Yuppie Elite. He's like, and here's an old one from the days. But Andy, you've got a halving 17th of April 2028 right in there. So
I like my chances.
Yeah, there's your juice to get to 400.
Yeah. Wow. Plant that one in your diaries, plebs. But to bring this, I mean, it's been a great meandering conversation, as always. But to bring it back to what we started talking about at the beginning, and this is, I know through personal conversations, Jesse, this is why you started looking at like the cold storage options and how do people protect that? Because if you're listening here and you got a coin or two anywhere that we've just been talking about, the next decade or the decade after, that just becomes like such a significant amount of wealth. And if you're holding more than that and you've been stacking diligently away for the last 5 years or so, then this is something that you're gonna like really have to think about now. And those, to your point earlier, those hardware wallets, those signing devices, whatever you want to call them, they get pretty heavy pretty quickly in these ridiculous like rip-ups. And the social engineering that's been happening, and I'll point people to go and listen to Junseth's podcast. I think he's released another one since, but the one I listened to was shocking.
I think he's had 3 now.
Really?
Yeah.
So
he said, the third one, he said that this guy jumped into the boat. Like this fish jumped in the boat because he was a hacker who wanted to be interviewed about being a hacker. And so he proactively sought it out because I guess Junseth has become like known among these hackers.
I like the balls on this kid that he was still a senior, right? I think he was like 15,
yeah, he claimed he was a high
schooler
schooler.
like that,
yep.
driving around in the most ridiculous cars. And I'm thinking, it was really sad actually to listen to, because the kid thought he had found like the key to life, not realizing that he's just a full-on felon at the age of 15. Like you're a criminal. There's no coming back from this. Like you will not. Well, once you're caught, and you will be caught, and even if you're not, like inside, your soul knows, and that's never a good place to be. But do you want to explain to people what's going on, how this is being perpetrated, and what people really need to be very, very focused on?
Yeah, let's tag team that one, Andy. There does seem to be an uptick of scammer activity, targeting Bitcoiners, targeting crypto holders in general, I suppose. A big part of that is there have been leaks of customer databases, Ledger and Swan being two companies where their databases have been leaked and are available on the dark web. And recently, Swan customers received two separate phishing emails where the emails were sent out, and they look like they're official. They use the logos and have the right kind of voice to them, and they say, we've had a data breach, and you can secure your coins by following these steps, right? But if you see that email and you believe it and you start taking those steps, well, you're actually falling into a phishing trap, and you're handing over your control of your Swan account to hackers who are going to try to log in as you and then sweep your funds to an on-chain address that they control, and then you're screwed. So that's been going on, and part of that too is customer phone numbers are included in these databases, and so there's this cottage industry that's popped up of scammers who pretend to be tech support calling, trying to help you solve some kind of crisis with your coins. And it's the same outcome of they are trying to social engineer you into handing over control of your account so that they can sweep the funds out of it. And Junseth is an OG Bitcoiner who's been recording calls that he's received because he's on these lists, and he records these calls, and weirdly enough, these scammers, a few of them have been happy to talk, proud to boast about how successful they've been in accumulating ill-gotten wealth by perpetrating these frauds. And so it's a problem. And it's a silent epidemic in a way, because evidently they're being successful. In Junseth's first call, the scammer bragged about a $1.2 million withdrawal from Swan that Junseth was then able to, alert Swan was in progress, and Swan was able to stop it before it happened. But if it wasn't for that call, maybe it would have happened. And if there's a cottage industry, it means that they're having success. And so there's hundreds of Bitcoin holders who are being tricked out of their coins. And maybe it's $100,000 today, and you get scammed out of that, and it hurts immensely. But it's just $100,000, and maybe your salary is $100,000, and so it'll take you a few years to save that back. But this is Bitcoin, and if Michael Saylor's projections are right, his base case is a 200x over the next 20 years. So that $100,000 in Bitcoin today would become $20 million in Bitcoin in 20 years. And so if you lose it today, it's a tragedy that that alters the financial trajectory that you as a Bitcoiner would have been on. And you can be right and you could be early and you could have stacked Bitcoin. And if you allow yourself in your security arrangement to be breached and you lose that Bitcoin, you may never get that opportunity to stack that much Bitcoin and realize the upside that's coming over the next 20 years. So I think that's what's happening, what's going on. There's an uptick of that. And I think it just underlines the importance of having the right custody solution. And if you're technical enough, if you're up to it, multi-sig that you control, collaborative custody, great. Like do that. Just get your coins off an exchange. Like, if you're using an exchange, don't leave them there. If you're using a single ledger, don't leave it there. That's what they're targeting. Get your coins into a multi-sig setup. And if you're interested, multi-institution custody helps solve this problem as well. And without the technical and security burden on the end user. So that's part of our motivation at OnRamp is to, help people prevent this tragedy of coins that could be lost today, preventing the, financial outcome that a Bitcoiner deserves because they were right and they were early and they stacked their coins.
Andy?
Yeah, that's really well said, Jesse. I think the only thing I would add is I know two people personally who have been scammed specifically out of Bitcoin. One was scammed out of, other crypto as well. And on the one hand, I take the really high level view. There's a whole online scamming industry, that's grown up over the years. The internet is the perfect place to scam people because you're not face to face and you can just, create a connection to someone from the other side of the world. And it's a numbers game. They contact 1,000 potential marks, and if one of them pays off, it's worth their time. And also, they get really good at it. They get really good at creating urgency in particular. So that's one of the red flags is, if you get contacted by someone who's talking about, there's been some breach or there's something wrong with your security setup or there's something wrong with, the exchange where you got coins, but don't worry, if you take the following actions quickly, right? Often it's quickly, you can fix it. And then the corollary also is some of these scammers play a really long con. Most don't, but some do. They get to know you over time. They sort of build trust. They can feed you trading ideas and you make money on trading ideas, and then they sort of build the trusted relationship over time, and then they convince you to part with some of your funds while they set up the next greatest trade or other financial transaction idea for you. So there's so many ways it can go wrong, and obviously education is the main thing. Know what you hold. Understand Bitcoin. Listen to Princey on the regular, especially those technical episodes with people, his brilliant guests that talk about how Bitcoin works in detail and how the security works and how multi-sig works and how to keep your keys away from the internet and all these important concepts. And that's all I would add. And I think as Bitcoiners, we all go through our journey of learning and understanding, and we make reasonable decisions and trade-offs about, how we want our coins and what setups and what baskets, et cetera, et cetera. And that's an individual choice that you have to make on your own. But the more you know, the better off you are, the more confident you're going to be, and the less likely that you're going to get scammed. And tell your friends and family and everyone else too. These scammers are out there. Scammers everywhere. Goldstein is right. Everyone's a scammer. And be careful. Stay safe.
And one thing that I will add there, because it was very shocking in the during the interview, he was talking about how he was using emails or phone numbers or whatever to emails specifically, actually, to hack into people's Google accounts, for example. If you've got the email, somehow you can jimmy the password, and all of a sudden you're in the Google account, and they were just going through photos. You're like, oh yeah, look, someone took a picture of their seed words. Thank you very much. Swept the lot. And it's like, no. And when I'm helping people set them up, get a pen and paper. Like, yeah, whatever. I'll just take a picture. No. Please don't do that. Do not do that. Do everything offline and be prepared, because if they've got your phone number, they've got your address, they've got your Gmail account, whatever email, then they can hack into, or what's the Microsoft, like OneDrive, or is that G Drive? Yeah, G Drive for Google, OneDrive. They'll get in there. So even if you've written out on your computer, even if you're offline and you've written out on your computer a file for your wife or your spouse or whatever to do, like, no, that's a bad idea. Handwrite it, because they will go to any lengths. But as we were talking about at the very beginning of the show with Lauren, if you've got a multi-sig setup and you've got something set up with OnRamp as well, just not, they can't get to that. There's no way. Like that wall built around like a multi-institution, multi-geographical, multi-sig, and it is multi-geographical, right? I'm getting that right? Like the key holders, are they in different parts, or are they all in the US?
Well, two of three in our standard model are in the US, in
Right.
different states.
Right.
But we do have a multi-jurisdiction option, which is for a premium option.
Yeah. Okay. So it's there. Like that's as tight as it gets, I think, on the street right now.
OnRamp's building. One day, one of the keys will be held on the moon, and maybe not Mars though. There might be too much latency in the signing time, but
multi-planetary, yeah.
Multi-institution, multi-planetary, multi-sig. Yeah. Shoot for the moon, boys. All right. So is there anything else that you wanted to touch on before we do the final question?
It was a great rip.
All right. If you had one last orange pill left to give to somebody, who would you give it to and why?
All right, I'll go first this time. I was quicker on the draw. Kamala Harris.
Yep. Nice.
I mean, obviously, people are talking about the politics. They're talking about, what does a Democratic administration mean for Bitcoin going forward? What does the Trump admin mean for Bitcoin? I'm not actually sure that it makes all that much difference, but I do think that it's unlikely that she understands Bitcoin. Perhaps she's open to it, but I would feel a lot better about policy in the US for the next 4 years. If any and all current political candidates understood Bitcoin and or were pro Bitcoin.
Yeah, that's the right answer. Actually, before you said that, I jumped to Trump as my answer.
But that's right too.
You got it correct.
And obviously he's closer to understanding Bitcoin or the value of it.
He's very close. He's got his own coin.
Yeah, exactly. So his recent forays into shitcoining tell me he needs that orange pill still.
Yeah.
I think that what Senator Lummis trotted out right after Trump's speech at Nashville, and the day after RFK talked about a 4 million Bitcoin U.S. strategic reserve, and then Senator Lummis comes out with the 1 million Bitcoin plan, a bill that will get shot down immediately. But yeah, I wish that Trump actually, like, if Trump could actually believe in the imperative of a U.S. strategic Bitcoin reserve and wanted to get to that 4 million number in order to match what we have with gold, that would be the biggest. Yes, it does mean government buying Bitcoin, but I think that's always going to be a part of Bitcoin's maturation as an asset. and it would be incredible to have that happen. I don't, it won't. That time will come in the future, but it would not only be good for Bitcoin, it would be really good for the United States. I think it would cement the United States preeminence and the geopolitical realm for the next century, which would be fantastic as an American. So anyway, that'd be mine, and I feel more strongly about that answer than in prior episodes. So,
Right.
the potential of a politician understanding Bitcoin and having the power to authorize using, a budget, a national budget to purchase Bitcoin. Like we're entering into that world, and it will be a huge tailwind for Bitcoin, because there's how many coins are there that are available to be purchased by nation states? Not that many, so they're gonna have to bid like hell to free up more supply.
Yeah, and I'll just throw in there Scottie Pippen, because what's he doing?
Oh, Scotty.
Oh, it's really sad to watch such a legend. Somebody's in his ear, somebody's manipulating him, someone's giving him this great freaking idea, and you can see what they're doing. He's every tweet is hashtag Bitcoin, 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 and then you're like, no, man, like you're really misleading people here, and it's gonna end really badly. Like the integrity of his whole career will be just come tumbling down right in front of his eyes, and somebody behind him who's in his ear advising all of this is going to walk off into the sunset very rich. So Scotty, if you're listening, please, no more of the shit coining. Shield Bitcoin if you understand it, and you clearly don't.
Great advice.
All right, lads. Until next time, when are we going to do this? Q1, I guess, of 2025. Maybe.
Yeah, Q1.
Yeah, we'll set something up.
We can do a review of the MicroStrategy, Q4 or Q1 report, and the largest single quarter profit in. It probably isn't the largest single quarter profit in history, but it'll be up there.
Yeah,
it's gonna be. Absolutely. All right. Thanks for coming on, lads. Take care. All the very best.
Cheers, Princey.